This is a review of my Forex options trade for May 2018. If you watched last month's live trading video, you would have seen that I entered 3 trades, one on the British pound Canadian dollar and 2 trades on the USD Canadian dollar. The following week after that video was taken, I did enter into another trade that was USD Japanese yen. I sold a put at 108 with the same expiration as the other 3. I'll show you the deal ticket. So here was the trade confirmation. 50,000 units at USD Japanese yen, strike 108, same expiration 20th of June. So let's go through these trades individually and we'll see how I did. First of all is British pound Canadian dollar. So I sold a call at 1.78, which is marked by this line here. And as you can see, in the 4 weeks after that trade, price did retrace, it did go up, but it was nowhere near 1.78. So that option expired worthless, and I get to keep all of the premiums, £75.93. I'll do this one first because there's more to talk about on USD CAD. USD Japanese yen. This was a trade that was taken 1 week after the live trading video was recorded. So my analysis was that this pair was in a bullish environment. So I sold a put at 108, which is this line here. Price did come close to it, but it turned around and again it finished in the money for me. So expiration, there's nothing else for me to pay, and I get to keep all of the premiums that I received at the beginning of the trade, £52.60. Lastly, let's look at USD CAD, where I made a mistake and important lessons need to be learned. So there were 2 individual trades that were put on to make up an iron condor effectively for USD CAD. I sold a call at 132, which is this line here, and I sold a put at 125, which is down here. So the analysis last month was that most likely price will stay within these 2 lines. So the put option was completely safe during the trade. Price went nowhere near that and it finished in the money for me. So nothing else to do and I get to keep £36.81. However, the call option, the one that I sold, actually expired out of the money for me, which means that I lost money on that. 132 was the strike that I was selling it at. Price actually did went up and it actually finished 132.86 was the price when the option expired. So that option expired and it was exercised by the person that bought the option, and I was out of pocket £247.09. So the net for that trade is minus £195. Now the mistake that I made, and I wrote it here, on this trade here was the fact that I actually forgot to cover this position. I was speaking to my trading partner in Mexico, and I remember on the day, I still have the chat record, I was telling him how I was going to cover this position, and this was before price got to 132, and then I just forgot about it completely until the following day when I went back and have a look, and then it was no longer a viable option to cover this because of the way the options market work. Every day closer to expiration, it is more expensive to cover than the day before. It was a mistake on my behalf. I do have reasons why I forgot, but at the end of the day, it doesn't matter. It's my fault that I forgot about it. So going forward into the future, I'm going to be writing a note and sticking it onto the front of my computer monitor so that it does not get lost in my daily notebook where I often scribble out things and cross this thing out as I complete them. That's how I actually forgot to cover the trade, because it was lost amongst all of the scribbles. And it's a mistake that shouldn't happen, but it did, so I need to fix that. The other thing that I wanted to work on is the fact that I need to come up with a way to manage a trade when the analysis for price action actually change when the trade is still open. So from last month, when I put on the trade, which was this candle here, during this candle, price was still in ranging mode for this pair. But of course, it changed, and actually it went from neutral to bullish. At the moment, my trading plan for options does not have anything related to what I need to do or what I can do when the analysis that led into the trade actually changed. In this case, it changed from a ranging market environment to a bullish market environment. I had a trade put on when market was ranging, but then it changed about 3 weeks into the trade. I need to figure out what to do. Should I then put on an extra trade based on the bullish sentiment? Should I be looking to cover a lot earlier? Should I be looking to cover a lot more aggressively? I don't have the answer to those questions yet, and those are the things that I need to work on for next month's trade. So all in all, this month finished in the negative. I lost just under £30 for all of the trades. Had I not made that mistake, it would have been a positive month. So one tiny mistake makes a difference between a winning month and a losing month. But I'm glad I'm getting these mistakes out early. Hopefully I would learn and I don't make these mistakes anymore. Speaking of next month's trade, this is already at the end of June. I have decided I'm gonna give June a skip and will be trading in the middle of July or maybe early July instead. Reason for that is I've been really busy at the moment. I've just bought a house. I need to do some renovations on it. I'm managing all of the projects. So I don't want to be stretching myself too thin and having to not be 100% dedicated to the options trading. So we'll give it a miss for this month. It will only be an extra week or two before I put on the trade. Right, this has been a review of my trading for May 2018. Thank you for watching, and I'll see you in my next video.